So hi everybody. My name is Uwe Weiss. I'm from a company called Yonder. We're based in Karlsruhe, Hamburg, London, and the US. And in the heart, we are a company which is packaging machine learning algorithms, what people nowadays would put into the market segment of artificial intelligence, package it into enterprise software applications to automate day-to-day, near real-time or batch decisions based on pattern recognition and what you would call or might call big data. It's a space which is much overhyped. We have been in this space for many years, and actually our history is that we are a carve-out from CERN. So we are a typical spin-out where a professor and a couple of PhDs took out algorithms and have started to commercialize them. And I'm going to talk about these algorithms and their impact in a minute. You can compare us like any AI startup which would typically come out of Cambridge, MIT, or Stanford, in this case, Europe, Geneva, and Switzerland. CERN itself is the largest machine in the world, and it's the largest data producer in the world, so the algorithm's origin comes off the heart of what you would call big data. And that's where we also learn to deal with pattern recognition and the application of algorithms to very large-scale data sets. We still have research licenses out there, but we are a commercial company, which is basically replacing old enterprise stacks. And old, I mean, it's an ugly chart, but old, I mean, you've built layer and layer and layer when you're an enterprise on top of your transactional systems, typically SAP systems, Oracle systems, databases, in order to visualize the data, to report and to act on top of data you visualize out of these massive transactional data systems. Accounting systems, logistics systems, warehouse management systems, ordering systems, e-commerce systems, pricing systems. And typically a human being takes decision based on the visualization of data, looking back into a rear view mirror, and making the decisions based on a human being behavior or applying rules. Even if you talk about automation or half automation, and we talk about business decisions like an order at a retailer or setting a price in an e-commerce system, it's always based on a human bias and on a rear view mirror view. What these relatively new concepts of machine learning and AI-based enterprise software applications do, and is replacing the rule-based enterprise stacks, the rule-based systems, and putting more intelligence into the systems. And that's part of a Gartner chart. You take the data in, which can be streaming data, it can be real-time, it can be near real-time, everything basically you find within an enterprise or outside, weather forecast data, size of a parking lot, competitor price, and take the action automatically. And at the core of enterprise software has always been the automation of a process. And now you can dynamically, with kind of a liquid software stack, automate these processes massive scale. A couple of our customers, and we focus on retail, are the second largest online retailer in Europe, is the largest retailer in Europe, Kaufland, sister company Lidl, well known too, or the largest health and beauty chain on the continent, DM. They have one common denominator. They are private, they are owner-based, and their management has looked ahead and has invested into such technologies early on without looking at quarterly reports. So these guys have been the early adopters of such technologies for a reason. And when you look at a large supermarket, which falls among our customer and market space, how humans make decisions, and a large supermarket takes a lot of decisions per day, ordering decisions, assortment decisions. Typically decision-making is based on these effects you see. That's a few. We've looked at these effects, psychological effects. When you take a decision, maybe a well-known effect is a sunk cost fallacy. When you've bought a stock for €100 or £100 or $100, and it goes down to 50, it has to double so that you get your money back. But still, and I think many people have experienced that, you will hold on to this stock. Or you're decision-making pattern is based on framing effects or outcome bias or many times overconfidence. How computers make decisions based on artificial intelligence is always cold, fast, it's much more rational and much faster. And these are a few of these algorithms, and people reading about AI or machine learning will have read about it, especially about deep learning. There's lots of concepts and misconceptions about deep learning, how you apply it really to processes. We are a strong believer in the concept that AI and machine learning has the best value if it can automate routine day-to-day decisions on massive scale. And I think 60 to 70% of the software you will see in the market in the near future, many of the companies coming out of the valley, you will see decision-making, automation at the heart of this. Why are we in retail? And why is retail one of the two sectors which has been disrupted most by such technologies? Obviously, there's the reason Amazon. Amazon is an algorithmic business. From price optimization down to logistics decision, down to predictive shipping, down to predictive allocation of shopping baskets of a buyer they don't even know about today. It brings them incremental efficiency, but it brings them also much more effectiveness and much better competitive effects. And that's scary for many retailers now, which are in brick and mortar supermarkets especially, that Amazon moves into the fresh sector, where everyone underestimated the fact that they could do it and would do it. And what they can do is they can bring their statistical machine learning and AI superiority into this market, and they compete now with businesses which are lagging behind with technology. That's why it's an attractive sector for us to be with technologies in this market, which you would basically only find in a company like an Amazon or Walmart Labs or a few others. But the second reason is, if you imagine that your customer at the end of the day in the shopping basket gives you, let's say, €5 or £5, everything you get is this as a profit margin. So you have 1%, 2%, maybe a little bit more of margin, maybe as a brick and mortar retailer. 50 or 60% of your revenue comes from fresh food, and all of a sudden you have a degenerating margin, declining revenues, and Amazon has invaded your market. That's happening in the UK actually. Everyone familiar with the situation with Ocado, with Amazon, and the 4 or 5 big supermarket chains knows that an additional effect is the German discount retailers like Aldi and Lidl, and all of a sudden you're fighting. And technology is one of the key factors to become more competitive and also to become more efficient. Let's look a little bit of the real-time factors influencing decision-making. Say you run a supermarket in Bristol, in Bath Road, and you want to know the customer demand tomorrow, 1:30. And all these factors you see here, the weather, the day within the month, the availability of stock, competitor prices, an offer you might have out there, the day of the week, seasonality. There are hundreds of factors basically which could influence how much you will stock. And you see a very full shelf here, which is great for the customer. But if this shelf is this full, 8 o'clock in the evening, you will have to write off a lot of this because you can't sell it again tomorrow. And think of the margin of 1%. That means you're in a huge imbalance. You will serve your customer experience, but at the other end, you will lose a lot of money. And with one of these effects we've seen of human behavior, the next time you will potentially find on next Friday an empty shelf with an unhappy customer because he can't buy what should be in the shelf. And that means lost sales and so forth. So typically it swings back and forth. And you can optimize that through learning effects you see with statistics, which can be huge. So a typical Blue Yonder supermarket customer automates around about 100 or 200 million decisions per day based on machine learning software with the data influence we see here. And that's ordering decisions. Another customer, like a non-typical online customer, would optimize hundreds of thousands of pricing decisions. And this is our customer base. A little bit about numbers. So we are an AI cloud application company. Typically, our customers automate 99% of their decisions with our software. We apply it everywhere in the supply chain where we can, where you see huge statistics and automation effects, price, assortment, custom experience. And the latest game is omni-channel, where onliners meet brick-and-mortar retailers. The market opportunities, 1,000 retailers plus in the world, typically the large ones, grocery, fashion, health and beauty, electronics, or DIY. We're a team of around about 150 people in 3 countries, Germany, the UK, and the US. We have closed a funding round a year and a half ago with a large private equity investor, Robert Pincus, which gives us enough leeway to compete with our Silicon Valley competitors and the SAPs and Oracles of this world. We are competing with their budgets in the large enterprises. We have 1+ billion transactions per day which run through our cloud systems. These are the automated decisions, growing fast. And our SaaS revenue is about to grow 50% per year. That's not the CAGR, that's the last year's number. But more important, the bookings have tripled or quadrupled this year because a lot of effects come together. And one of them I have shown to you, like Amazon entering the fresh food area. So we're growing fast by bookings, transforming them into double-digit revenue growth per year. We have expanded internationally, that's the use of funds, and built our product line in order to make our customers more competitive. Thanks so much for listening to this. AI and machine learning, you will see, will be at the core of many, many IT systems in the future. It's really disruptive and transformative, and I'm glad we have been in this market very early on. Thanks so much.